The Realty Debate with Manisha Natarajan, powered by Reliance Home Finance.
This year's union budget exempted REITs or real estate investment trusts from dividend distribution tax on the amount of dividends which will be paid out to investors. Both developers and investors cheered this move because this now enables builders to monetize their office buildings. Now that the last tax hurdle is out, how soon can we expect REITs in India? Who will list first and how? And how much capital would come in? Are some of the questions that we're going to be talking about today. Will this single change boost India's office space, putting it in the league of Hong Kong, Singapore and the likes of London? Today we are joined by Sanjay Dutt, Executive MD, South Asia, Cushman and Wakefield. Also with us, Ashish Shah, COO, Radius Developers, and Ambar Maheshwari, CEO, Private Equity Funds, India Bulls Asset Management Company. With me here in the Delhi studio, Saurabh Chawla, Senior Executive Director, Finance, DLF. Gentlemen, thank you so much for joining me. I think just quickly to set the perspective for our viewers on what really REITs are, understanding this vehicle before we deep dive into the discussion. These are listed entities that invest mainly in leased office and retail assets and distribute most of their income to shareholders as dividends. REITs give developers a new avenue to raise funds by allowing them to sell finished commercial buildings to investors and then list them as a trust. They were first established as far back as in 1960 in the US, 1999 in Singapore, 2007 in UK, and the last off the block has been China in 2014. And well, in 2016, we've got a lot more clarity than we ever had before. Gentlemen, I think the first question or big question that I'm going to ask, there was a lot of excitement, Sanjay, on the budget day when we did the discussion. And then, of course, it started tapering off and I started reading articles and there are many issues. So was that excitement a bit stretched and are there many concerns, or do you think that everything's been taken care of?
I believe one of the major issues concerned with REIT is taken care of. And I think this is a big news because now developers and investors are actually hopeful of making REITs a reality. Before that, there were many other issues which, of course, are still important to overcome. And those are more concerned related to the way the industry is structured. For example, most of the developers own commercial asset in multiple vehicles. How do you bring them under one holding company and then list it, and then stamp duty related charges at the state level and capital gain once they transfer from one SPV to another? I think we have solutions for those, and I think at the state level there may be considerations around it, but the dividend distribution tax was the key. If this had not, if this was not addressed by the government, I don't think things would have really moved forward. And I believe now you will see a potential by the end of the year, perhaps one REIT happening, if not certainly by 2017.
All right, Saurabh, end of the year, is that what you're building into your plans, business plans at DLF, or sooner?
No, I agree with Sanjay. It's still some time away. In India to structure in a vehicle.
End of the year, Saurabh, doesn't seem too long. No. I mean, it
still 12
takes
months.
That much time. Okay,
no,
and you're finding that as a long period.
It is a long period in capital markets. So
okay.
I don't expect in these volatile times any listing to happen anytime soon. So one, of course, are the challenges of structuring it into a vehicle that can be taken to the capital markets, and the second is volatility. But having said that, being a listed entity, even today you don't have ICDR norms by SEBI, you don't have listing agreements by the stock exchanges. So still a lot of work needs to be done. How these entities will be accounted for, the accounting, the CF, the Chartered Accountants Institute has to come out with its norms. So it's some path away before these become reality. But yes, like Sanjay said, we should see a REIT coming soon in 12 to 18 months time.
Okay, so we've stretched the time from 12 to 18 months. There are real challenges. Ambar Maheshwari, what's your timeline on how soon can we expect REITs in India?
I think it's a slightly longer proposition compared to the 12 to 18 months that people are talking about. Saurabh just mentioned. Obviously, for someone like a DLF, as soon as possible would be a great idea. But, so first of all, let me just say that, whatever government has done is a fantastic thing. I think, this will enable the market to become a lot more transparent, a lot more governed from that perspective. But, one of the key questions that we need to ask is, who will invest into REITs? If you look at, most people are expecting and anticipating a retail investor to come out and participate in the growth story that real estate is, and that commercial real estate, rental yields, income producing product, and so on and so forth. But I think, if you look at the overall profile of the Indian investor, really he's a 35-year-old professional who's looking to make a double-digit IRR. Can REIT provide you with a double-digit IRR to begin with is a big question mark. And I think, therefore, the question, who will really invest into REITs? In my mind, I think while on the policy front, on the taxation front, the government has done a whole lot of things, I think there is just that last leg that one needs to look at from a government perspective as well. Small savings need to channelize themselves into real estate, into REITs. And small savings through the institutional framework. So whether it is the pension funds, whether it is provident funds, insurance companies, all of these are governed by their respective regulation. And that regulation has to allow institutions like these to participate in a REIT. And I think that becomes a key issue, which I believe still needs to be done.
That's a big battle. Let me get Ashish in first, and we'll come back to you, Saurabh. Ashish, so yes, great policy move on the taxation front, the last hurdle taken away. Still many challenges, and I've actually noted down everything that everyone said. There are stamp duty issues, there are also holding issues, because right now assets owned by different builders are held within different SPVs, so you have to take care of that, listing norms, listing agreements, accounting norms. But the biggest question, who will invest in REITs?
I look at it differently. It's a great new product for the capital market. It's a new avenue that investors can invest in. We regularly see clients coming in to buy income yielding assets on a almost weekly basis. So there is a market for it. But above all, we should be a little patient. This being a financial product, for a growing economy over the next 10 years, 15 years, you ought to have a product, an option for an investor to choose from as he or she optimizes the portfolio strategy. So instead of going through the hassle of title, going through who the tenant is, a client taking a real estate exposure can certainly look at this as the easiest way of investing. So sure, I think we just need to be patient. Over time, developers understand what is the sort of exit that is likely. Today, we have two options. One is hold it, go for lease rental discounting, or do a strata sale. Now is a third option. So how do we manage our capital at the outset, in flight, through a construction finance, and what are the exit available? So this is one more avenue. Sadly, we can't maneuver it very easily in flight or just at the end. So the benefits of REITs will definitely show up from an investor standpoint and from the developer standpoint, but we have to be patient.
All right, so patience. Now, when you say patience, Ashish, what's your own estimate on when we will see the first listing of REITs? We've got a time frame of 12 months from a very optimistic IPC head, Sanjay. Then we've got DLF itself saying that 12 to 18 months, and we know how necessary cash is for them, or for them to unlock cash from their business. 18 months, Amber says much longer. Amber, 24 months? Take a pick.
So longer than, so first listing may happen earlier, Manisha.
Okay.
My point is, if you look at every other country as well, whether it is the US, whether it is Singapore, Australia, Canada, wherever the REIT regime is vibrant, in the US, the first regulations came out in 1970, and which is exactly when the first REIT came about as well. But to make it a vibrant market, it took 25 years.
Okay, so that's that's a different thing. So just put your money on the table for the first listing. We're only talking about first listing because there's excitement. We get it that this market will take a long time to mature and all the kinks to be ironed out. 12 months, 18 months, 24 months? 24 months. All right. We are also joined by Vinod Rohira, MD Commercial Real Estate of K. Raheja Corp. Vinod, welcome to the show. Couple of things which we've discussed are A, with the DDT exemption now, is the last hurdle over or do you see more hurdles? And when will you see the first listing of REIT with a new policy announcement?
So I wouldn't say there are hurdles, but there are a lot of smoothing edges which need to get done to make it more attractive in the long term.
Okay.
And I see, and I tend to agree with the panel, 12 to 16, 18 months it will take for the first listing. But it's very important to get the right people to list first because this product has to be seen more in the long term than the short term, because this has to be in a mature market, a natural progression to instruments of real estate in the marketplace.
Okay. Now, Saurabh, I know that you wanted to come in at the point where we were discussing who's going to invest in REITs. Now, so there are two issues to it. First, the quality of REITs, right? Vinod has just raised the point, what is the quality and who will list first? And number two, then what kind of investors will come to? Are you confident that you will get the right kind of investors to pump in money in REITs?
So yeah, first I just wanted to update Amber that certain regulations have changed in the PF market for investment into the REITs. Last year, REITs, the PF market could not actually invest even in the CMBS, but now they can invest, and we have placed some portion of our earlier CMBS actually into the PF market. So the second aspect, again, I agree with Amber that you have to attract the retail investor, whether it's through the institutions or directly. But here, being a very stable product, where you have a DPU and you have to have a growth on DPU, that's what will attract.
Tell me what DPU is. My God, now this is all so much jargon, Saurabh.
So it's dividend per unit. Dividend per unit. So if you are getting, let's say, I'm just taking a very simple maths over here. If your cap rate is, let's say, 10%, that's your DPU. You'll get a dividend at 10% odd. But the key question is, how fast is that dividend really going to grow? And that's how you start to ascribe premium or discount at that valuation level. So if normal standard today in the office market is that your rentals are growing, let's say, about 5% every year. So you're talking about a total return that an investor can seek of about 13 to 14%. And that's
13 to 14%? All right. What I'm understanding is
this is Manisha, between dividend and capital appreciation.
Okay. So you're summing it all up.
I'm
okay.
Summing it up.
Okay.
So this is not debt. So again, everybody starts to say 14% of debt. This is pure equity returns that we are talking about.
Okay.
So that's how actually global pension funds, sovereign funds, even some long-term private equity investors are looking at India.
Okay,
and
hold
they
on,
are actually.
So this argument I've heard even on the budget day. Sanjay come in here that, oh my God, now you're going to have so much excitement from foreign funds which will flow into Indian REITs because look at the mouth-watering returns they're likely to get. Now, I really want to know, is that going to happen? Because they also have a forex risk, right? Couple that with the fact that just dividend yield is only going to be a single digit number. So capital appreciation is in nobody's hands really. You're assuming that the economy will grow and therefore you will see a capital appreciation. You could also go through a cycle of no capital appreciation. Sum it up. What's the kind of number that an investor will look at?
So if you were to go back to 2005 in investments and returns, people started talking about certainty of return than the quality of return. And I think what this does is gives you certainty of return. And I think there is a lot of capital globally which wants just that. And they're okay if the returns are not double digits or mid, 20s or 15s, for example.
Where are the smiles? smiles. I mean, you've got an IPC saying that all your assets in next time you sign a lease are going to get completely re-rated. Fantastic news. But Vinod Rohit, I mean, what is it that internally you're building into your plans? When will you unlock, and what is the kind of returns, indicative returns that you will be able to give your investor?
Okay, so just to lead on from what Sanjay was saying, it's very important to know in where we are in the entire cycle of commercial real estate, and most of these listings are going to take place of business parks essentially, which is more driven by demand for ITES companies. So 70-80% of the real estate that's going to be discussed for listing will ideally be from that marketplace. That marketplace, we are seeing an average 10-15% growth year on year, and you're not seeing quality A-grade commercial real estate available in the short term for these consumers to come and absorb the real estate, and the demand continues to be high. When you look at all of these factors, you're seeing average rentals going up dramatically. They've gone up in the last 6 months, and the same trend will continue for the next 12 to 18 months. If you see that, and which is why Sanjay was saying that you will see kind of a surety that the escalations kicked in inside these contracts will be lower than what the market rents will have to offer in the short term, and which is why they will quietly escalate their rents and sit in that real estate piece. And for the new demand for space, they will be willing to pay higher rental, because rent, we must all remember, is between 2 and 3% of their operating cost.
Right.
The real costs come from human resource, and if human resource is available, these companies will go on expanding and growing in areas they believe are ideal for their business to survive. So keeping all of that in mind, you will see a robust demand continue to take place, and you're not seeing more than a handful of quality developers across the country that can offer that portfolio.
Actually, I was coming to that. Ashish Shah, so is this a time where the excitement has started building around, but then you don't have enough grade A office space, and therefore there's a high chance of actually what Vinod and Sanjay are talking about, the entire grade A office space to get re-rated big time on rentals?
I think again it's a function of how the demand is flowing in the last 12 months has been significantly fast, and we also foresee the next 12 to 18 months demand to remain fairly robust. So you know, India is one of the few countries which is growing fast, and office real estate is very directly linked to the macro factors. So office real estate is well poised, rents are bound to firm up, and there will be mismatch in terms of it takes us to make 3 years to make a building.
Okay.
So how quickly we are able to.
There's going to be a little bit of a demand supply mismatch, which I think 2016 you should absorb all the extra capacity is what I'm hearing or reading in all the reports. Okay, gentlemen, I'm going to conclude. So, Vinod, if there was one thing that you would want the government to take a look at, SEBI to take a look at, any of the government arms to fix, to make the job of listings and REIT easier, what would that be?
Besides many points, one important factor I believe will do a good job for REITs will be to allow for a 20% factor of growth instead of a 10% factor of development assets, because that will allow portfolios to grow much faster. You'll be able to utilize capital much better and give a much better return at the end of the day to the investor.
Saurav?
Sure, I think my points are also similar to what Rohit has just highlighted. They can put certain discipline norms vis-a-vis leverage is concerned, but if the growth is embedded within the REIT, obviously there'll be much more capital that will flow, and it will also encourage developers to take assets into the market.
All right, Sanjay, anything apart from this that the government should be quickly taking a look at, which would make REITs a reality faster than later?
So we all are excited right now, Manisha, that REITs are happening, but I can tell you if they are not successful, the story will end much sooner than we envisage. And you mentioned earlier Hong Kong and Singapore. Actually, they are good examples. Hong Kong is exactly a good example of what we shouldn't do, and Singapore is a great example of what we should do. And I think it boils down to the asset management, transparency, compliance, risk mitigation. And I think if the developers are going to manage the assets, they'll have to go through a new learning in terms of how to sweat the asset, make the asset sweat and make it perform better, and which means investments, which means managing very diligently and transparently. And if there are professionals managing it, for example, it can really enhance value. I think government should lay out some guidelines, because You can do the listing, it can be a great cap rate, it will be a great exit opportunity, but at the end of the day, the retail investors are not getting the return, or they're being misled or misrepresented, and later on you discover that you have to spend more money to maintain the assets. State governments, for example, has subsidized property taxes for IT parks, and suddenly state governments decide to improve the property tax from IT, which is discounted, to commercial. It will erode all the profit that these
So
retail investors
you
are
need-
thinking of.
you
So
need
I
more
think there are a lot of
certainty.
concerns.
All
We need
right,
certainty and
Amber,
clarity.
final word, and then we will conclude this discussion because we have actually covered fair bit of ground on REITs.
So from a government perspective, I think, the only thing that my point is create an environment for high growth. GDP has to grow, fundamentals of the economy have to look good so that interest rates could come down. That to me is the biggest factor for the success of REITs. And
Okay.
dollar stability, absolutely, as Sanjay mentioned.
I remember talking to you offline, and your premise was that only when interest rates come down and your fixed products like FDs and etc. come down to about 4 to 5%, that the differential between those products and REITs will become mouthwatering enough for you to drive investments to REITs. So is that the premise that we're discussing here?
Yeah, no, absolutely, Manisha. I think, unless the fundamentals change, inflation comes under control. If you recall 2006, 7, 8, the interest rates, the mortgage was 7.25%. There is no reason that 5 years from now or 3 years from now, the rates actually come down below 7.5%. Mind you, it's a 15-year time frame that we're talking about from the last 7%, right? So if that comes down, if today as an individual investor, my rate of interest on State Bank of India fixed deposit is 4%, 5%, only then real estate REIT starts to look far more attractive to me.
Fair enough. Sanjay Dutt, Vinod Rohira, Ashish Shah, Amber Maheshwari and Saurabh Chawla. Gentlemen, thank you very much for covering all the points that we needed to discuss after that big policy announcement on REITs. Perhaps we can hope to cut this time to half, but expecting any immediate listings of REITs, I think, is an overhype and an overexcited state of affairs. I'm going to conclude on that note. Thank you so much for watching, and goodbye.